This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia's crude oil exports in August fell to their lowest level in a year, data from the Joint Organization's Data Initiative showed on Thursday. The country's oil exports stood at 5.671 million barrels per day, BPD, in August, their lowest level since August 2023. Saudi Arabia is the world's largest exporter of crude. Saudi's crude exports in August fell by about 1.2% from July's exports of 5.741 million barrels of oil per day. At the same time, Saudi's production rose to 8.992 million barrels of oil per day from 8.941 million barrels of oil per day.
Britain has imposed sanctions on 18 further Russian oil tankers and 4 liquefied natural gas vessels, the largest batch of sanctions to date against the country's so-called shadow fleet, the government said on Thursday. Britain says the shadow fleet uses illicit practices to avoid Western restrictions on Russian oil. The government said it was working with maritime authorities to demand that Russian vessels with suspected dubious insurance provide details of their insurance status as they pass through the English Channel.
Moving on to the top news in the energy sector.
China and Saudi Arabia were the top destinations for Russian seaborne fuel oil and vacuum gas oil, VGO, exports in September, traders said, and LSEG data showed on Thursday. Total fuel oil and VGO exports from Russian ports last month rose 2% from August to about 4.2 million metric tons, according to Reuters calculations based on LSEG data. Since the European Union's full embargo on Russian oil products went into effect in February 2023, Asian countries became the main destination for Russia's fuel oil and VGO supplies. Direct fuel oil and VGO shipments from Russian ports to China rose 1% month-on-month in September to 0.8 million tons, while supplies to India rose by 53% to 0.3 million tons.
Onshore fuel oil stored at key trading hubs Singapore recovered for a third straight week with a rise in net imports, official data showed on Thursday. Inventories rose 2.1% to 17.95 million barrels, about 2.83 million metric tons, in the week to October 16, based on data from Enterprise Singapore. Net imports, calculated by subtracting total exports from total imports, climbed 61.7% week-on-week to 750,000 tons. The market has been eyeing more cargo replenishment in the second half of the month, following several weeks of tightness in prompt supply. Next, we have the top news in metal markets. Copper prices fell on Thursday to their lowest in more than 3 weeks as funds exited industrial metals and switched to gold to reduce exposure to China's struggling economy. 3-month copper on the London Metal Exchange fell 0.6% to $9,505 per metric ton during official rings. The contract hit as low as $9,435.50 earlier in the session, a level unseen since September 23. More investors are becoming risk-off and decided to put their money somewhere else, said Tom Price, managing director with Panmure Liberum.
Dalian iron ore futures tumbled on Thursday to their lowest in more than 2 weeks, weighed down by a lack of fresh stimulus from a key policy briefing in top consumer China, while higher supplies from mining heavyweights also pressured the market. The most traded January iron ore contract on China's Dalian commodity exchange ended daytime trade 5.99% lower at 746 yuan, $104.74, a metric ton, hitting its weakest level since September 30. The benchmark November iron ore on the Singapore exchange slid 5% to $99.05 a ton by 07:05 GMT.
We will now look at the top news in the agricultural sector.
Russia has imposed a temporary ban on Kazakh grain imports for its own market, but has granted Kazakhstan permission to transit grain via Russian territory for export to other countries starting from Thursday, Russia's agricultural watchdog said. The move indicates the tensions between the two grain exporters, which also transship each other's oil, gas and metals, may have eased but are yet to be fully resolved. Transit of grain will be possible if Kazakhstan provides phytosanitary certificates for the final destination country and ensures the transshipment of the grain from railway cars directly onto export vessels, Moscow said on Thursday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.